All right, everyone, let's do a quick sound check. Let me know if you can hear me. Bill, Bob, Jeff, Ray, Sally, Scott, everybody else. Nice room here today. All right, everybody. So let me actually first remove this here. Okay, so everybody can hear me loud and clear? Fantastic. Hopefully everyone is doing well. Today is March 1st, and I like to do these webinars on a monthly basis, maybe twice a month, just to get everyone up to speed on the markets and how they're doing, what to expect, and as well teach you something because I'd like to take from what we have as traders that you can actually bring home, try it, practice it, and then if you have any questions, you can email me. I know that some of you are interested in the mentorship class. We just started one. The next class is March 14th, mid-March, in about 2 weeks. So if you're interested in joining the upcoming March 14th class, it's actually a little bit later. I have a lot of requests for evening classes. Usually I do the classes about 4 o'clock, 5 o'clock, but this class is actually at 7 p.m. Eastern Standard. So the March 14th class is a little bit later for those of you who work or have other commitments. You'll be able, if you'd like to attend, a little bit later in the evening at 7 o'clock. Eastern Standard, right, exactly. Okay. Now, so to begin, I'm not sure how many beginner traders are in the room or intermediate, so if you can give me a sense of who's new, who's a new trader, who is somebody who's been around the block a little bit. The way that I like to teach and show you my perspective on the market is not looking at indicators. So for example, we have the E-mini S&P here, and these are candlesticks, right? And some of you like bar charts, but I really recommend everyone focus on candlesticks. And I know some of you may know what the candlesticks mean. This is the basics. I teach the basics as well if you need me to go over some of the basics, especially during the classes that are mentorship or Atlas line or trade scalper. If you need the basics, I'm happy to go over it with you. But essentially, stay away from the bar candles and really focus more so on candlesticks. And the reason why I say that is because it's a good interpretation of what to expect, of what you see, of the interpretation of the market. So one of the things that I like to do is understand that news impacts the market, and markets are cyclical as well. Hey Jeff, lots of experience, not too successful. Okay, been to blonde run the block in Forex, all right, Ray? So what we're looking at here is an understanding of indicators are late when they trigger, for example. Now you can have moving averages and MACDs and all that good stuff, but in reality, if the event already happened, if the moving average is crossed, that means the market's already underway. So I like to refer to entering at the beginning of a move or entering as the move is reversing or turning around, really at the beginning of something, not necessarily after it's underway. So just as an example, you see the market going up and up and up and up and up, and a lot of you may believe that this is a great opportunity to hop on board the moving train, hop on board this trend. But you have to consider trends have a lifespan. Trends don't last forever. So trends have a lifespan. And the way that I like to understand how to interpret trends or non-trending markets is that about 80% of the time, most of you here in the room have already heard me say that, 80% of the time markets don't trend, do not trend. So whenever you see the moving averages cross or the MACD or all those indicators that are telling you go long, go short, by the time they trigger, the trend is over. About 20% of the time you have a trending day or a trending market. So what I want to do is I want to understand what makes the market non-trending so I can maybe trade support, resistance, maybe I can trade instead of counting on it continuing, what makes this? And then on the other hand, when there is a trend, how do I understand that as early as possible because I may not want to go against that trend. So this is very important to understand. that markets don't trend all the time. I know everyone wants a trending market. It'd be so easy if the market continued and or started and continued, but that's really not the case. The market works more so like goes up, goes down, goes up, goes down, and this is where a lot of people get chopped up. So we have to have an understanding that this is, for the most part, more normal than a trending day or a day that starts and continuing and continues. So part of this webinar today is going to be touching on a few things. The first is going to be trading the news, how I like to trade the news. Hey Brett, let me know if you need Ninja Trader, if you have any questions, or if you haven't already downloaded the Getting Started Guide. The Getting Started Guide really starts you off with how to, begin right your journey into trading. So what I want to do is I want to understand that news impacts the market. News really does, because when there's a news event, the market could go ballistic. It could go up, it could go down, it could do nothing. But there's an uncertainty that occurs. So I want everyone to look at some type of news event, some type of, I would say, red stars, red flags, whatever you decide to use as the, so let me just bring this up here. Whatever you decide to use as a news calendar, I would say start looking at it. So for example, you have here a couple of options. So here's the DayTradeToWin website, and you can look at, for example, under software and free downloads, a news indicator here for NinjaTrader 7 and NinjaTrader 8, which basically allows you to know when news occurs. We have to know when news occurs because I don't want to get thrown into the mix. There's also an online news calendar, so if you prefer a web page, I also created here a web page. And so basically, my concern is when there's a high priority news event. So the H's here in red, H means high priority. Now, I'm not concerned about the Canadian dollar so much as I am with the United States giving me a high priority news event because let's face it, the US pushes these markets worldwide. So whether it's the DayTradeToWin news calendar or the DayTradeToWin news indicator that I offer, which is, let me just add it here to the chart. Anybody can download it as well. Let me see if I can find it here, news, right there. And it has, a couple options. You can have low priority, high priority news event. Yep, totally free. Absolutely, Gary. So this here tells me that today, March 1st at 10 o'clock, there's manufacturing and it's red. So what would happen if I tried to trade here at 10 o'clock, right as this report, which is already scheduled to be released, what would happen if I was in a trade long or a trade short? What would happen? Well, nothing could happen. That's definitely an option, but possibly the market could go up or could go down very hard. And if I'm not prepared, then it could just run me over. So we have to know that news definitely impacts our trading, whatever type of trading you're doing, because it's an unpredictable factor. I like to try to keep the predictability as strong on my side as possible. So I really prefer not to jump in without knowing as much as possible. So what can we control? Well, we control when to trade and not to trade. And so what usually happens during a news event, and actually let me bring to you another news calendar. It doesn't have to be my news calendar because these news calendars, they provide the same information regardless, right? So I'm going to bring up here another news calendar just a moment. But what typically happens is the news is released, and maybe we'll see it here. And what a lot of traders attempt to do, what they attempt is to maybe say, let me bracket off the area just above where the market's trading and just below where it's trading. And the goal would be if the market is or provides a positive news event, then you see a huge rally. And I'm going to jump on board by going long here at this price, and I'm going to take it up. Or vice versa, if the market has a negative news event, the report is bad, whether it be the manufacturing or whether it be FOMC or whether it be uh, the housing numbers or unemployment, and it goes down, then I'm going to be on board going short and I'm going to reap some profit. So that's really the goal. Now, when you think of this, I think it makes perfect sense, right? Why not try to jump on board this pop? So it makes sense, but it doesn't work out quite this naturally as you may think. All right, it's not this cut and dry because there's a couple things that can go wrong. Scott says here, is the news event available for TradeStation? We don't have it for TradeStation, Scott. We have it for NinjaTrader, but you don't need it in reality. Let me show you a few other options that are free as well if you're using NinjaTrader. So, for example, one of the calendars could be the Bloomberg, or this one is the Econo Day right here. And so you can just visit this page. I'll put this in the room here, Scott, for you. There you go. And you can copy that link. And this actually is good because it gives you history, right? You can go back in history and see. So again, I'm looking at the red stars. See that? Red stars, red stars. And it gives you the same information, right? So these news events, it's no mystery. They're scheduled. As long as it's something of high priority, which is indicated by red text, red color, red stars and flags and things. Okay, Scott? So this is one, Bloomberg. So it's all the same information. It's just how you access it. So the idea here is that the market may pop in one direction or another, right? Like I said, it makes perfect sense, but there's a lot of things that could go wrong against you. So what could go wrong? The first thing would be that instead of the market, let's say it's a positive news event, instead of the market going up, after it fills you, it could go up and not continue. So it could begin by popping higher and going and going and going just a little bit before it turns around and goes lower. So you can see that you are trying to catch, let's say, the pop, whether it's negative or positive, but it could go higher to fill you, not really continue much more than that, and then reverse. This is actually very common, where the market does not go and continue, it moves up and just goes back and forth within a very large range. So this is a problem because the ranges are so large. That's one issue. The other issue is slippage. If you have a stop order right here at this price, 23.84.50, you and 1,000 other people, you're not going to get this price. If this is what you're assuming is the proper entry long, consider that if you've ever seen a news event occur, the market will just jump. It'll gap. It will actually give you maybe 3 or 4 points, sometimes that much. If the volatility is that high, it won't give you this number. So slippage is an issue as well. Now you have to think about why and how the actual move occurs the way it does. Electronic trading is a zero-sum game, especially in futures, not so much in Forex, where you're actually trading against your broker. Your broker is the one that takes the opposite side of the position in most Forex accounts. It's not really a fair game, in my opinion. So with futures trading, it's a zero-sum game, one buyer for every seller. So if the news is positive and you have an overabundance of buyers pressing market buy, it's going to start to search for sellers to offset and initiate the transaction. And what happens is that there's so many buyers that the market just starts going up and up and up and up and up and up and up, looking for sellers, and it is very volatile because of the amount of transactions at a very specific time. So you have slippage. That's a problem. You also have another issue, which is a positive news event does not immediately infer that the market will go up, and vice versa. A negative news event doesn't infer that the market will go down. Believe it or not, I would probably say it's closer to 50-50 than anything, because it may go down first before it goes up. So you have another problem that whatever value or report or number on whatever report is you're looking at, you're trying to interpret, was it good or was it bad? Was it higher than expected, lower than expected? It doesn't always relate to the market continuing in that favor. So that's another problem. So you have all these issues that are really out of your control. You have the volatility, you have the market with large ranges that could go down before it goes up, huge moves, 6 points, 8 points, 10 points, easy. You have slippage. These are things that we can't control. So in my opinion, there's no reason to be thrown into this kind of mix during a very small period of time when the news is released or the report is released, and then the market goes ballistic for 10 minutes and then it calms down. So here's a different way to look at this. How do we really take advantage of news? Well, the first thing is what a lot of traders don't really do. They stay out of the market, or you should stay out of the market right as a news event is being released. So at 10:05, because the candles that you're seeing here in the timestamp begin the timestamp here. So for example, when you look at this here at 10:05, which is this candle here, it hasn't began yet. The timestamp is beginning at 10 o'clock and ending at 10:05. So this, what you're seeing here, is an ending time. It's not the beginning time. So this candle right here began at 9:55 and ended at 10 o'clock. So this next candle is going to begin at 10 o'clock when the news is released. Now there may be nothing to it, or there may be a huge move that occurs. The thing is, we don't know. So at least understand what the timestamps are referring to. 10 o'clock means 9:55 to 10. 10:05 begins at 10. Now another tool that you could use would be the bar timer. It's not something a lot of people use. Please use it, the bar timer. So it tells me that in about 3 minutes you may see some action, right? You may see the news push this market, but we know it's 3 minutes. It's not a rough estimate. It's in 3 minutes. That's the first thing. Now, for Scott, who's using TradeStation, I do offer in that free indicator page or free software page of DayTradeToWin I believe it's a bar timer and a tick counter for TradeStation. So if you need a bar timer for TradeStation or a tick counter, you can download it for free there. Scott, all right? Fantastic. Okay, good. So now the news, whether it's negative or positive, occurs. What I'm looking for is not to be in the market at all. I'm going to wait 10 minutes until all these transactions and all the chaos is over. Instead, I'm going to do a couple of hard and fast rules here. The first is know when the news occurs. So I really want to know if the news is happening at 10 o'clock Eastern Standard, at 8:30 Eastern Standard. FOMC usually in the afternoon, not always, but usually at 2:30, 2:15. So know when the news events occur. The next thing I want to do is wait to see if there actually is a move based on the news. I want to see if there's a reaction. So a reaction is a larger than normal candle that plots because of the news. So know when the news occurs, right? Look at the economic calendar. Second, wait for it to happen. See if there's a reaction. Sometimes there's no reaction. Sometimes there's a huge reaction. Again, we don't know. So the reaction is just a candle larger than all others that came prior to it. So if all these candles here have a certain high to low range, and then you have one candle that's double that or triple that, then I would definitely say there's a reaction. Sometimes, like I said, there's no reaction to the news. So I'm looking for a reaction. Now, it's not a specific number. It's not has to be 3 points or 5 points or 10 points. You can basically realize immediately that there's a reaction by the high to low range, the candle that was triggered on the news that was created. So if you see a candle that's equal to any of these, there's no reaction. If there's a candle that looks something like this, let's say, this is a definite reaction. You see how large this candle is, right? I can't draw a candle, it's considered a bar, but opened here, closed here, so you can see that it's much larger than the other. So there has to be a reaction. Now next, what I really want to do is I want to refer to a positive reaction or a negative reaction as the result of the news. So was the reaction positive or negative? So basically, keeping it really simple, green candle is a positive reaction, red candle is a negative reaction. So I want to make sure if there is a reaction, it's not an uncertain reaction. It's a reaction where everybody bought or everybody sold because maybe the report was better than expected or worse than expected. So again, know when the news occurs, was there a reaction, and was the reaction positive or negative? So far, anyone have any questions for me? Everybody okay? Scott, Sally, Peter, Paul, there's no Mary, Mike? Okay, so what do I do next? Well, if the reaction is positive, that means that a lot of traders bought the market. That means a lot of traders jumped in and just clicked buy up market. If the news was negative and the market moved very heavily in the opposite direction, that means that many traders immediately sold the market, sell at market. Now think about the result of that. The result is there could be slippage on most of those traders. Nobody really got the price they wanted. They're hoping the market's going to continue, and there's an overabundance. It's an open concept of contracts that are out there. Now, if the market goes, let's say the news is positive. If the news is positive and the market goes straight up, and these traders are able to buy and get out at a profit, fantastic. Everybody makes money, everybody's happy, great. But think about what if the traders who bought just jumped in, right, following the herd, did not see the market follow through to the upside. Maybe it went up a little bit, but then it came down. So let's say that was the buy, and it came down and started to go down. You have to think about what all of these traders who jumped in at market are left with. They're not left with a lot of options. Their only solution to the market going against them would be to get out at a loss by getting stopped out and selling. In addition, many of them will try to recover by getting stopped out and selling, and then selling again as a reversal. So instead of me guessing the direction, what the news report is going to do, and what the traders are going to react on, I rather take a different approach to see if the initial reaction, which is either positive or negative, I'm not looking at the news event to figure out, what the number was in comparison to what it was 2 weeks ago, in comparison to is adjusted, nothing like that. It's just the initial move was positive. If it does not continue and it gets all these longs in the market and it reverses, these traders are long an outstanding number of contracts, which has to go somewhere. So they're not going to hold on to this forever. They're going to get stopped out, and they may even, in addition, to reverse. This is a problem because for these traders, they went long and they're getting stopped out. And then if they reverse, there's another sell, which to me brings the opportunity, unfortunately, to take advantage of this. If the news is positive, anytime throughout the day, whether it be in an hour from now, whether it be in 3 hours from now, maybe it's right away, but I'm looking to sell the market if the news is positive. If the news is negative, let's say it's the opposite, where the market went straight down, I'm looking to buy the market at an area which, so let's say the news is negative, I'm looking to buy the market anytime throughout the day, whether it's immediately or it's within a few hours or even within the last hour of the session, because they will hold on to this losing trade until they can't anymore. So what are the rules? The rules are, if you know it's a positive reaction or negative reaction, anytime throughout the day, anytime throughout the day, you want to wait until, this is a standalone method, you want to wait until 2 consecutive candles close above, and that's to go long on a red negative reaction, which occurred. It may have occurred 8:30 in the morning. If there's a positive reaction, then I want to do the, I'm sorry, this is a 2 consecutive candles close above to go long, right, this is a negative reaction. If it's a positive reaction to the news, then anytime throughout the day I want to do the opposite. I want to short it when 2 consecutive candles close below the low of that green candle. So I'm going to show you a few examples what this means, and I'm going to just look at my economic calendar here, and here at 10:05 there's no real reaction today to the news, the manufacturing index, but there was 8:30 in the morning, there was another news event this morning, which is referred to as this candle right here. Now, I don't think this is a clear-cut, larger than normal candle based on the news. There was a little bit of a reaction, but nothing that I could say everybody sold or everybody jumped in based on the news. If it was, just to give you an example, since this is a red candle, I want to buy it anytime into the future when 2 consecutive candles close above this high of this reactionary candle. 2 consecutive candles closing above. Well, it's a closing price. It doesn't mean to be red or green or doji. It just 2 5-minute candles closing above this price, 23.80.50. And when that happens, it would give me an option to go long, not going short, hoping it's going to continue. On February 28th, I don't see here any news besides the 8:30 international trade. So let's take a look at yesterday at 8:30 in the morning. And we'll see some examples as well. So here is 8:30 in the morning is right here. So this is when the news was released. It's not anything really that I could say a reaction occurred. But if it was, if this was a larger than normal candle based on the reaction, then I would want to go long after 2 candles anytime throughout the day closed higher consecutively. It's important, consecutively above here. Everybody with me? Everybody good? Bill, Bob, everybody? Okay. Now on Monday, February 27th, there was also a news event at 8:30. And again, if there was a reaction on Monday, on February 27th, then I could see it because it's this candle right here. And I would want to go, instead of it being a green candle, if this was a large candle, I'd want to go short anytime throughout the day into the future, 2 consecutive candles closing below that. So this has to be a reaction in order for this method to work. If there's no reaction, then it doesn't work. There has to be a reaction because of the opposite reaction that everyone is forced into. Does that make sense to everyone? So that's how I like to trade the news. It's separate from anything else that I do. And sometimes it also coincides with another method, which I'm going to show you, called the ABC method. And the ABC method, if you've seen some of the videos and seen some of the things that I do, is really outlining the three parts of the day, because remember, only 80% of the time, or 20% of the time, the market trends, 80% of the time it chops around. So if I'm able to understand the type of day that exists, then why not look for opportunities to trend or opportunities to uh, support and resistance, chop around, or take smaller signals where I don't have to trail a stop or trail a target. So when I look at, for example, we'll look at yesterday, just as an example. When I look at the day, I really don't know as the day begins that this is going to be trending up or trending down. So I have really no real push in one direction or another. But what I like to do is to say, will the day be a trending day? One of those 20% out of the year type of days where you can hold on to a move. So what I like to do is I like to outline the three sections of the day. The three sections of the day are called A, first 2.5 hours of the session. So if you're international, remember the timestamp that you're seeing, 9:30 to 12 o'clock, here is just my Eastern Standard Time zone. The A part of the day, 2.5 hours. The B part of the day is the next 2.5 hours from 12 o'clock to 14:30. Again, it's 2.5 hours. B part of the day. And the C part of the day is the last hour and 45 minutes of the session. Okay? And so here is the C part of the day. It's a little bit smaller. Now, each of these parts of the day brings something different to the table. Sometimes the A part of the day here gives all the opportunities and nothing else for the rest of the day exists. Sometimes the B part of the day is the one that is the most important. So when you start off the day, you have to consider 80% of the time it chops around. A small portion out of the year, we have a trend that we can take advantage of. So here is the A part of the day. What are the characteristics? It's the most volatile. You have typically news happening here in the A part of the day. It's where everybody jumps in and positions themselves for the day, either long or short, position traders, swing traders. So the A part of the day is typically the day where I like to recommend a good move because of the action. Now I have here the ATR. This is volatility-wise something that helps me understand. I have hundreds of videos out there on the internet showing you how I use the ATR. So if you haven't already watched some of them, just go to YouTube. You'll find them, or the blog. Just search ATR on the blog. You'll see how I do this. And this is always the same. A part of the day, the most volatile, lots of action. We have news. It's just normal. This is the expectation. So what I want to do is I want to outline the highest high and the lowest low of the price, including the wicks, everything that occurred, including 9:30 and including 12 o'clock here. And I'm going to outline it like this. Ray says here, would the potential for this trade diminish if my two consecutive candles did not occur in the same session? For the news trade, Ray, that's what you're referring to? If the two consecutive candles occurred, let's say after the day, now you're in the Globex or another session, the answer is yes, it would diminish. It's not the same. It has to happen within the same session, Ray. It shouldn't happen, let's say, 3 days later, or with outside the realm, because the market may be doing something else at that point. Okay, so what you have is the first 2.5 hours outlined, highest high, lowest low, everything that happened. This is the market. As you move forward into the future here, what typically happens, so 80% of the time, think of this as normal. The market does not break above and does not break below this resistance and this support created by the first 2.5 hours, the A. It typically matches it, it touches it, it tests it, double top, double bottom for the day. Sometimes it goes through it by a couple of ticks, but it doesn't continue through it. So you have to think of the timestamp here of the first 2.5 hours of the E-mini session. And by the way, this is the same in all markets. It's not just the E-mini. This can be applied to stocks. It can be applied to currencies. Whatever markets you guys are into, soybeans is a great market. The FESX is a great market. The FTSE 100 is a good market. So coffee is a great market. Love coffee market. So whatever you decide to look at this, it's the same. It's price action. And that's really what I teach, price action. So this is the A part of the day. You see it as for what it is. And I also know that most of the time, 80% of the time, it's not broken. When it is broken, that's the opportunity for a trend. So I'm not necessarily expecting it, but when it does begin to break outside the range created by A, I pay attention because I may not want to counter trend. I may not want, for example, the methods that I teach are a combination of counter trend methods with manipulation, and some of the methods are actually going with the trend. If this is a trending market, I may not want to invest heavily on countering that trend, because if the trend is strong, trends will continue and continue, and I'm fighting it. I don't want to fight the trend if I know there's a trend. If the day is normal, then I'll counter trend the entire day. Roadmap, X5, blueprints, all those methods, Atlas line bounce, they are all counter trend methods. But if the day is trending, I have to step back and say, I'm fighting a trend. I'm not going to do that. So this is a good opportunity to understand the type of day that is unfolding. So as I go forward here in time, I'm not expecting anything. But if again, with the proof, 2 consecutive candles close above or below the A range, I pay attention because I don't want to go against it. I want to understand that the day is most likely going to trend, may close higher or close lower, and I have to be aware of it. So as a trader, we have to adapt. You can't trade the same way as you do on a trending day, as a flip-flop type of day, a choppy day. You can't trade the same when the market is slow in comparison to when the market is fast. We have to understand that these different situations exist, and we have to adapt to it as a trader. So we have to understand and interpret the price. So the first candle here closes below. Fantastic. I'm ready to go short, but I'm not jumping in on just one candle. Because if this is just a test of the low, the next candle could very well come right back up. So I'm not jumping in early. I'm going to wait for 2 consecutive candles closing either above or below. In this case, it looks like one has started. The next candle also closes below. Great. I'm short. Now, before you go short, a couple of caveats, okay? A couple of things to consider. The first is, you see this being 12 o'clock, the breakout is happening almost immediately as B begins, or just as A has already finished closing. We're not entering, let's say, 2 hours into the B session or towards the end of the B session. We're entering immediately after the B session begins. That's good. That's really good, because most trending days, or most of these moves, they occur immediately. So if you have a support and resistance created here in the first part of the day, the A, the following B part of the day is almost as if it says, this isn't stopping me and this isn't stopping me. It's going, going, going. This is exactly what I want. I want to see the market continue and not stop at all. So for me, the earlier it happens, the better. The earlier that this occurs, great. If it happens later, let's say past the hour and a half of B, so for example, here is the first hour and a half of B, this is not worth entering. It's too late into the B session. If it's going to happen, it has to happen within the first hour and a half. So the earlier the better, and this is happening immediately afterwards. So you're short, and you see how far the market moved down from there. This is not normal. This is, I would say, 20% out of the time, out of the year, this occurs. So I want you to realize that you can't expect this every single day. You expect instead, this is respected. So this relationship between A and B is very important. Now, in addition, the relationship between B and C is also important because the relationship here is that the low of B and the high of B also create an opportunity as the day ends. Late day rally, late day sell-off, all of these opportunities as the day comes to a close may exist, but I'll tell you, most of the time it doesn't. You won't have a late day rally or sell-off every day or 3 out of 5 days. It's rare that it happens. So what you're seeing is absolutely normal, and it's to be expected. You have to have some type of expectations on what you're seeing and how the market is playing itself out. So once it closes 2 consecutive candles below, I have an expectation it's going to continue and move lower from there. If it's just bouncing off of the range of A, high and low, it's normal. The same thing, this is the high of B, this is the low of B. What do you see moving forward in C? Nothing. You're seeing it chop around, you're seeing it flip-flop. Again, you have to say this is expected. Now, the indicator that I have called the ABC indicator is something that I offer my students, and it does this for you. So everything that I've just done manually, you can do manually yourself, and the indicator that I give my students does this for you. So you can see that it color codes it, it breaks it out, it gives you the entries to go short. It actually even gives you the entry if it bounces off. So if this happens to come down and then come right back up, that would be a long opportunity because you have to remember it's just bouncing off of the support already. We know what it is, already created by that to go long. So the ABC method, manually plotted, I just did it for you. Very easy. Doesn't have to be complicated. Trading is typically overcomplicated by many people. It doesn't have to be complicated. And the indicator provided with a couple of courses I offer it with, mentorship, everything is included with it, is also included with it. So let's take a look at another day. So here is day before that. So do you see how the A and the B here, right? This is A and this is B. How the B part of the day respected the resistance and the highest high of A. So you see it's very different when that happens. When it comes to B and C, here is the highest high of B. This is the lowest low of B. Late day rally or late day sell-off has to occur earlier rather than later. So you can't say an hour and a half into C, I'm going to think about a late day rally or sell-off. It should happen immediately. Those are the best trades, the ones that as soon as 2:30 rolls around, immediately you say, okay, it's breaking out. There's a rally or sell-off. There's earnings, whatever the case may be. Now, in addition, this is the E-mini S&P, but some of you may look at international markets as an opportunity or even overnight, because I know that everybody is all over the world. So the ABC method can also be plotted, and I'll just do this with the indicator during the London Open, which is 3 o'clock for me, 8 o'clock locally in London. So what I've just done is I've applied the same methodology to overnight. So here is A, here is B, and here is C. It's the same exact idea. It's just overnight. The one thing that I would have to caution you about overnight trading or after hours is the slow period the market provides. And so here on the ATR, if the market happens to be less than 4 ticks or 1 point, it's essentially a choppy flip-flop mess. Stay away from slow markets. 4 ticks on a 5-minute chart is the threshold. 1 point on the E-mini is the same as 4 ticks, but 4 ticks on any market, I would say, would be the minimum the market has to be at to consider trading, or else it's just choppy, 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 and gaps and things like that, dojis and so on. Make sense to everybody? Anyone have any questions for me? Now, I know some of you are asking about the current signals for the day on Atlas line and so on. So let me just show you for today. I haven't even looked at it because I was doing here the webinar. So let me remove everything off the chart, right? So we have a nice clean chart. And I know some of you may have the Atlas line, so it's exactly the same as I have. NinjaTrader 8 Atlas line is coming out, a little bit different. Some updates, some upgrades. Atlas line, everything looks good. 9:30 for me when the market starts. Let's see what it looks like for today. Okay, so for today, here is the Atlas line signal, 23.8375 to go long. And then from that point, we have to manage the stops, the targets. These are things that I teach. Time-based stop, prove it stop, catastrophic stop, targets are specific, and so on and so on. For the trade scalper, 1 minute chart, and I'm going to do the trade scalper demo here, and the signals for the trade scalper are as follows: long, 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 right? Okay, so hopefully everyone here had an opportunity to see how I trade the news, the ABC method, some Atlas line trades for today, and some trade scalper trades for today. If you have any questions, email me. Keep it simple. I have hundreds of emails daily. If you're interested in joining up, March 14th mentorship class includes all the courses and all the software, 8 weeks with me. Hope to see you there. Have a great day, everybody. Take care, everybody. Thanks, Paul. Bye-bye, everybody.